This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus will likely agree on Sunday another small hike in oil output targets for December, three sources familiar with the talks said, as the group moderates its drive to regain market share amid predictions of a supply glut next year. OPEC Plus has raised output targets by more than 2.7 million barrels per day, about 2.5% of global supply, since April, but slowed the pace in October and November to 137,000 barrels of oil per day from larger increases amid predictions of a looming oversupply. New Western sanctions on OPEC Plus member Russia are adding to challenges in the discussions as Moscow may struggle to further raise output.
Oil prices popped up on media reports that U.S. airstrikes on Venezuela could begin within hours, only to fall after U.S. President Donald Trump issued a denial of the report on social media. Brent crude futures were up 6 cents, or 0.09%, at $65.06 a barrel by 11:12 a.m. Central Daylight Saving Time, 16:12 GMT, while U.S. West Texas Intermediate crude was at $60.50 a barrel, down 7 cents, or 0.12%. Is this Donald Trump's trick or treat? Said Phil Flynn, senior analyst for Price Futures Group, noting that Trump had earlier denied reports of a planned attack on Iran before carrying out airstrikes against the Islamic Republic.
Moving on to the top news in the energy sector.
Analysts are holding their oil price forecasts largely unchanged as rising OPEC Plus output targets and lackluster demand offset geopolitical risks to supply, a Reuters poll showed on Friday. A survey of 36 economists and analysts conducted in October forecasts Brent crude will average $67.99 per barrel in 2025, about 38 cents above last month's estimate. West Texas Intermediate is expected to average $64.83 in 2025, slightly above September's estimate of $64.39. Brent prices have averaged $69.27 and $65.92 so far this year.
A huge nuclear deal announced by the Trump administration earlier this week provides a multi-billion-dollar incentive for the U.S. government to issue permits and approvals for new Westinghouse reactors, an unprecedented structure that critics say poses environmental and safety risks. Under the agreement with Westinghouse Electric's owners, Canada-based Cameco and Brookfield Asset Management, the U.S. government will arrange financing and help secure permits and approvals for $80 billion worth of Westinghouse reactors. In return, the plan offers the U.S. government a path to a 20% share of future profits and a potential 20% stake in the company if its value surpasses $30 billion by 2029. Next, we have the top news in metal markets. China's steel output will slip below 1 billion metric tons in 2025. On track to meet the government's pledge to reduce production, the state-backed Steel Association said on Friday, but a supply-demand mismatch remained. Crude steel output in the world's largest producer has been falling since touching a peak in 2020, but was still above 1 billion tons in 2024. Beijing pledged in March to continue steel output cuts this year to restructure an industry plagued by overcapacity.
Gold prices fell by 1% on Friday, weighed down by uncertainty over another U.S. Federal Reserve interest rate cut this year, but the metal remained poised for a third straight monthly gain. Spot gold fell 0.6% to $4,001.74 per ounce at 1:49 p.m. Eastern Time, 17:49 GMT, and was on track for a 3.7% gain this month. U.S. gold futures for December delivery settled 0.5% lower at $3,996.50 per ounce. The dollar index held near a 3-month high, making greenback-priced bullion more expensive for other currency holders.
We will now look at the top news in the agricultural sector.
Maize harvesting and winter grain sowings continued to run ahead of average last week, data from Farm Office France Agri showed, as dry weather in the European Union's biggest grain producer benefited fieldwork this month. French farmers had harvested 82% of this year's grain maize crop by October 27, up from 75% a week earlier and 36% a year ago, France Agri mayor said in a cereal crop report. That compared to a 5-year average of 74%. For soft wheat, France's main cereal crop, the office estimated that 68% of the expected area for next year's harvest had been sown by Monday, against 57% a week earlier. That was above a 5-year average of 61% for the same week.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.